Welcome to the NISM Masterclass. I am your host, Sashi Krishnan. Our purpose at NISM is capacity building for the securities market ecosystem. And as part of that purpose, we sit down with gurus of the securities market to understand and learn from their journey. I'm sure that all of you who join us in this masterclass will gain significant insights from the conversation that we are going to have today. My guest today is Lalit Keshre. Lalit is the CEO of Groww. Lalit and three of his co-founders set up Groww in 2017 as a direct mutual fund distribution platform. Within a year, it became one of the most popular mutual fund platforms in India. And over the last 7 years, Groww has added other capital market offerings like stocks, F&O, digital gold, ETFs, IPOs, etc. to its platform. Today, Groww is the largest brokerage firm in India with a market share of about 25% and an active client base of close to around 1.2 crore active users. Welcome to the masterclass, Lalit.
Thank you, sir.
And this is indeed a very, very impressive sort of journey that you have had. At 12 million active customer users, as I was telling you a little earlier, that you've now passed the number of active users that Robinhood has in the US, Robinhood markets, and they have close to around 11 million active users. Maybe not exactly the same kind of business that you have, but they took 11 years to do it, and you did that in just 4 years because you started your stock market offerings just in 2020. So could you just share a little bit of your journey? And the journey of Groww, especially over the last 4 years, the journey that you had over the last 4 years.
The journey actually started in 2016. The way we look at it is that stocks is one product that we offer to the customer, but what matters is the relationship with the customer. Overall objective is to be like the wealth platform for the customers. Although you started with mutual funds, stocks is like an addition to that. The reason why we added stocks was also because a lot of customers wanted it.
Right.
Based on the feedback from the customers on our multiple channels.
So when you said relationships, the customers' needs pushed how you evolved over the last year.
Yes. So when we started with regular mutual funds in 2016. And because customers kind of kept us asking why not direct and so on.
Right.
We moved to direct mutual fund, and then customers started asking why not stocks. We launched stocks and so on. So most of our product roadmap is driven by what customers are asking us.
Right.
And that is one of the reasons why growth also happened. So although we launched stocks, let's say in 2020, but by 2020, we already had millions of customers and they were already looking for stocks on Groww.
So the customers also asked you for example, F&O, they also asked you for ETFs, they also asked you for the gold-based products.
Yes.
And that drove how you sort of evolved over time.
So every product that we launch kind of brings a lot more customers and so on. There's one small correction there. Digital gold, we shut it down.
Oh, you shut it down.
We decided that we'll do only regulated products on Groww.
Right. So, The Economist, in its November 7th, 2024 story, titled India is undergoing, an astonishing stock market revolution. And you've been mentioned in that article too. Says that this is the largest ever experiment in participatory capitalism with barriers to entry falling. And roughly around 100 million people, not far above the poverty line, have become capitalists, owning tiny shares and stakes in publicly traded companies. I mean, 1 in 5 households now in India today hold shares, and there are almost 170 million demat accounts, and a large number of them are with you. So how do you see this trajectory of democratization of investment, as we would put it, in India, happening over the next couple of years? And today 65% of the households have already become capitalists. Do you see this, penetration level increasing dramatically over the next couple of years?
We feel that there's still a lot
Long way to go.
long way to go. We look at these kind of numbers, but let's look at now the amount of wealth that we have it in India and the amount of percentage of wealth that is kind of in capital markets.
Correct.
And the amount of wealth that is into assets where customer is not making any money, or they are not even beating.
Like fixed deposits and gold.
Bunch
and
of them, real estate,
property.
property is huge and so on, right? And of course liquidity also is important. And then you look at this, okay, there are so many demat accounts, but if you look at the active user base in last 12 months, it's might be like around 50 million or so.
Right. Okay.
We are talking about a country of this size with middle, like, if we just look at the upper middle class, lower middle class, right? If you just consider a population of like 700-800 million, more than that maybe, and now it looks like very, very small, right?
So how do you move all these guys who are invested into property, all these guys who are invested into gold? How do you move them into financial products? What needs to be done to do that?
No, we don't need to move, I feel like. I mean, customers have right to kind of diversify across multiple products. It's just that the allocation in capital markets is kind of growing now. Now it is growing. Ideally, like our job or all our participant job is to kind of make people aware about various situations, various kind of products,
Right.
and then let customers decide. And of course we need to have an advisor ecosystem and people who are helping customers invest money and so on. Broadly, like what you are also doing to make people aware about all the products and let them decide.
Yeah, but my question is more in terms of, if you need them to actually sort of build wealth for themselves, you need to nudge them towards, products that can give them a significantly better return.
Yes.
And we've seen, property, for example, if you look at an all India basis, would have given you a 7-8% kind of return. Rental incomes, rental yields are close to around 3%. They are very, very low. Fixed deposits are just giving you, a little bit over inflation, maybe 7.5%. So there is a nudge that needs to be given to investors to make them move to these kind of products. That is what will lead to democratization, right?
Right now, like everybody knows about the markets, and it's the other way around, I feel, where people have started thinking, oh, that you invest in markets and then you get like very high returns,
Right.
and they forget the risk component of
So
it.
the expectations have gone up significantly.
So it has to be other way around, where you are kind of making people aware that everything comes with risk.
Right.
And not everything is like risky, and also you need to work hard, like, or either you need to have patience. And so many people, it's very easy to hear stories like, oh, my friend made so much money in markets, or this and that, and you'll always hear those kind of stories, but there is always this risk element there, right?
Right. So in today's world, you can substitute that word numerical fluency with digital fluency. And it's not merely about digital literacy. I think we have gone beyond digital literacy, to start talking about digital fluency, because digital literacy is all about using digital devices, the technology to access information, that kind of thing. But digital fluency is actually your ability to use that digital platform to sort of transact and sort of make wealth for yourself. So how do you see that that digital fluency growing in the Indian sort of investing public?
It's coming natural to all of us.
Okay.
Because how the world is evolving, the role of internet and the transactions that we are doing for everything in our lives. I think this is like a natural evolution that is happening.
Right.
And more here also, when we talk about fluency, again, since both of us are like follower of Charlie Munger, that responsibility also becomes like a big thing.
Right.
Where responsible investing, responsible trading becomes a very core component of all of us.
Right.
Because I feel like online transacting, managing your wealth online, I think because of the ecosystem that we are all growing up in, I think it's all coming very, very naturally to us.
So you mean to say that the new generation, let us say the Gen Z and the millennials, they are able to they have a fair amount of digital fluency.
Yes.
But there is also a huge constituency of people who are on the other side of being millennials.
But we are seeing,
are they adopting to this kind of a...
Yes, the component, the proportion of customers like 40 plus, 50 plus, 60 plus has been significantly increasing on our platform.
Okay.
Even like my parents, for example, they are now using Groww. And by the way, they have never...
Are they using Groww because it is your company?
No.
Or they're using Groww because they know...
I waited for 8 years.
Now literate.
No, they are. So I waited for 8 years. I did not, never told them. And now they have started
Okay.
by the way, these are kind of customers who never thought about mutual funds
Okay.
or stocks and so on, right? So it's happening. But you're right. For Gen Z, for who are for if I look at my daughter, they know about things so
Right.
fast about,
Right.
it's a natural interface for them,
Right.
right? We are kind of need to learn that end.
For many of these Gen Z investors, anything that's got a touch to it or a personal touch to it may be something that they would want to avoid, I suspect,
Yes,
right?
yes,
They would prefer, a digital interface to sort of access markets.
yes. I think so. Most of them.
Okay. The financial aspirations of the Indians, especially the, as you said, the mass affluent and the HNIs, they have changed quite dramatically. Like now, people do believe that they need to get the best in the world and they need to have access to the best products, and their financial aspirations have changed quite a bit. So too is the fact that with these aspirations going up, there are greater risks, there are more pain points in the entire system. So what is your sense from what you observed of your customers on your platform in terms of their aspirations and the kind of products that they prefer today
Got it.
and the kind of pain points that you have in servicing these kind of customers?
So this is what kind of we continue thinking about. One thing what we feel is that people need lot more options,
Okay.
lot more products. Once you have invested your capital and then you have more capital,
Right.
and then looking for more products, right? Second thing is help, expert help on advice or something
Correct.
some kind of support. Okay, am I doing right, or where
Right.
should I invest, and those kind of things. So that also becomes very, very important. I think these are the two major components.
So when you say more products, like today, platforms are offering mutual funds, they are offering stocks, they are offering, F&O, they are offering, yeah,
Right. There's IPO,
IPOs and primary market
prime
products, etc.
intraday, yeah.
Right. But beyond that, what are the kind of products that you think will these kind of platforms will offer? Because will they offer you PMS products? Will they offer
PMS.
you alternate investment funds?
Yes, you're absolutely right. So PMS and AIF, because they allow you to kind of build
Tailor make your entire investment approach. Right.
yeah. So they kind of help you build very, very focused products,
Right.
right? In mutual funds is more democratic product.
Yes, exactly.
PMS you can cater to specific kind of your investment need and then do that
Today,
job.
are there any platforms that are actually offering PMS and AIFs on them?
Yeah, there are a lot of them. There are all wealth companies do that.
No, not as manufacturers, as distributors.
All wealth management companies do that
Okay,
today.
but no, online, on our platform, like
I don't think they're large platform. Even we don't offer right.
yeah, you don't offer, but you think it
Yeah.
will go that way.
We will eventually, one of our philosophy is to offer customers everything choice, and then kind of provide all the information and let customers decide. So these products would also
So
eventually.
let me just take up this word choice which you use, right? See, too much choice sometimes paralyzes the investor, right? How do you sort of tackle that issue? Because if you give him a choice of, here's a plate, you take whatever you want, and then he says, now you tell me what I'm supposed to take. How do you sort of address
So
that?
that's where advisory comes into picture. But to answer this, right? So when we started, actually, everybody else used to do something called robo advisory.
Correct.
So what you do is, okay, what is your risk profile? And you ask 10 questions, and then you say, buy this mutual fund. We thought that give open up all 5,000 mutual funds. But if you look at Grow's mutual fund page, you will have all the information available there. Past returns,
Of all the
fund,
5,000 funds.
everything. You don't need to go anywhere else. Who's the fund manager? What is the expense ratio? What is the taxation like? What is the benchmark? How does it compare with other funds? What are the holdings? All the holdings, everything we put it there. And then customers can search or look at all the pages and then decide to buy. And that's what it's very counterintuitive that you are offering choice of everything to the customers, and then kind of, customers are doing that. So people use this word called conversion, right? Which is
Right.
okay, they will actually buy or not. And we thought, let's not worry about it. Let's offer with all transparency whatever customer needs. And it actually worked better than, anything else.
It will be interesting to know why, because I remember reading Sheena Iyengar, if I'm not mistaken, who said that the more choice you give people, the more sort of paralyzed they get and the less chances of making a decision. But you're trying to tell me that I'm giving them all the information, I'm giving them all the choice, and they're still making that decision.
Yeah.
So why?
No, so I think trust plays a big role here, right? So if you open up everything, then there's a bigger trust. Customers trust you more, and everything is transparent. So I think that overpowers the
That
paralysis
because
of the choice and so
excess
on.
choice, yeah.
right? On the other side, you are like, okay, you have like three things offered, and you're always thinking, oh, why these three?
Does he
What
have a
are, what are
vested
the what
interest?
are the other three?
Okay.
Or does the seller have a vested interest? So that's like that overpowers the other side.
Okay.
So it's like, again, it was very counterintuitive when we started. Actually, like we got like tens of such questions. It will be so tough and so on. But there's also another strong feeling that people are very smart, like investors. There's a very bad analogy, but if you watch game of cricket, it's just so complicated.
Right.
There's so many scores, so many things, but people can track and people will remember 19 or whatever 2000 mein how much run that person made, and and how many balls. And
Right.
if you make things simple and transparent for customers, they can learn.
Okay. And what are the pain points that, from a servicing perspective, you have by offering so many choices? Do you have customers who come back and say, Aapne to, you've shown me 5,000 schemes, now, but you've not told me what is best for me. So, do you
No.
have pain points like that?
We get that often, but the thing is, from day zero also we were very clear with customers that we are not telling you what to buy. We are just educating. For example, what is the difference between balance advantage fund and, let's say, debt fund, or small cap fund, or and with what risk, with time duration that you should look at a particular category, and so on. And of course, there are like independent companies that do value research as a star rating. So we
Correct.
put, okay, value research is giving 4 star to this. We also give you past performance and so on, and you make a decision, what you want to invest in.
Let me pick up one particular point. You said risk. So, one thing we've noticed over the years is that customers don't really understand their own risk appetite.
Yeah.
So, by putting all this information out there, how do you sort of help that customer understand his own risk appetite?
It's very tough,
Tough.
right? I think after investing for so many years, for ourselves also, it's very hard to judge. Risk tolerance is different from risk capability.
Correct, exactly.
So I can think about myself that, I have risk capability of, let's say, 50%.
Correct.
But when it actually happens,
Right.
our tolerance levels are very, very low. So for example, there was 2008 time, right, when there were a lot of, we were not around then, but I know a lot of people who thought, okay, if markets go down by this much, it's like, there were some micro cap funds, for example, right? They went down by 60%. When you are investing in a small cap fund, it is like given that there will be drawdowns. Even when you are investing in a stock, in a company, possibility of drawdown is always there, and that. But when it actually happens, you realize, oh, I can't afford to lose that much money, and sell and so on. So that's like more psychological, and that's why probably this face to face, sometimes advisors help. They will be sitting with you, and and the moment it is kind of there is a drawdown, or you can call them, oh, what should I do? And they'll say, oh, don't worry, this bad time, wait for 3 months, wait for 6 months, wait for 1 year. That's
So
like
they act like a therapist.
therapy.
They hold
Exactly.
your hand in
Exactly.
bad
So that is
times.
the beauty of that model.
Right.
And
So in the digital model, who's the therapist?
so in digital model, there is no such thing. It's only content, or you
Okay.
can do, but we might have to do that. There's a genuine problem.
Okay. So, the next question I had for you, Lalit, was that what are the main drivers for digital adoption? Because, intuitively, all of us tend to believe that it is cost, like low cost, no fees, or if I may say, in many cases, no fees, but in some cases, very, very low fees. The price arbitrage that you're getting between going to a full service brokerage house, possibly, and coming to, a platform like yours. Is that the only driver? Or do you think there are, other drivers that actually are bringing, these 1.2 crore people onto your platform?
Is the smallest driver, I believe. The biggest one is customer experience, right? When customers come to digital platforms, they get a promise of kind of best experience, like discovery, onboarding, transaction, then tracking, everything, transparency, and so on, right?
Right.
And the second biggest driver is simplicity. Again, like everything is like very, very simple. There is a saying, right? The cheapest option is the most expensive option.
Right. Correct.
So I don't think cost drives customers that much.
So let me come back to customer experience. You told me two things: customer experience and simplicity.
Yeah.
Now, there is a journey, right? A customer journey. So you as a platform must be tracking that customer journey.
Yes.
And then you must be saying that, let me eliminate the various pain
Yes.
points in this customer journey.
Yes.
So could you just give us a sense as to how you make that customer journey, as
Got
they
it.
say, wow?
So we have invested significantly into that. So let me first answer, how did we do that?
Right.
So how part is more technical, like we have invested in infrastructure everywhere.
Right.
Like be it payments, onboarding, support, order management, risk management, everything, right?
Right.
And over that, there's this layer which kind of is visible to customer.
The
Like
customer doesn't see what's behind. He
customer
only
doesn't
sees
see
what's in front of him, right?
and then we have put this, signals, the measuring. So NPS is one example, net
The
promoter
net
score,
promoter
right?
score.
Through the entire customer's journey, we kind of keep tracking NPS.
Right.
And then we have a waterfall model of NPS. So there is an NPS, but you can kind of build like this tree
Right.
and you can say, oh, at this point of time, my NPS is this. And at this journey of customer, and then we can kind of focus on that and fine tune it. For example, today I'll get to know today how is my NPS for deposits on Groww. Deposits like,
Right.
when they are investing, they need to deposit some
Right.
money, and how is the NPS of that?
Right.
And if it falls, then we know the problem. So there is like this continuously measuring of the entire customer journey.
Okay. And in terms of simplicity,
Simplicity
because that
again,
is the
that's the
user
barrier.
interface,
So
right?
there, what we look at is the barrier.
Okay.
Okay, where is customer getting stuck? So this advisory thing, right? So we have like a lot of channels. Now, one channel is customer support. Customer support is calling and say, oh, I am stuck here. So that customer is directly telling you.
Correct.
We have this events called AIKG. We go to like tier 2, tier 3 cities or, Bangalore, Bombay,
Right.
everywhere.
Right.
And there we meet customers and customers come and tell us. Third is like I am using my own product. So I use my product like 2 hours a day, every single day. And I know where I'm getting stuck. We have 10 commandments, and one of our commandments is be power user of your own product.
Okay.
So you have to use your product every day, right?
Okay.
So that kind of helps. NPS scores help us. Then we have this.
So which is in your opinion the biggest pain point? Is it the onboarding?
See, onboarding is always the one big thing because it's very complicated.
Correct.
You have to do KYC and it's a longer. So
what's your thinking in making that simpler? I mean,
So
including
we-
the KYC process.
No,
I
no,
mean, though of course a lot of
KYC
it may not be in your hands, but
yeah. No, so we have revamped it just so many times in so many years. It seems seamless to customer, but still, let's say if you want to buy something online, you just go and buy. But when you're investing, which is also rightly because it's about hard your money, so you have to kind of verify your bank account, you have to do KYC, you have to kind of give your email number validation and those kind of things are required.
right.
Sometimes friction is
So
also
they are
good.
unavoidable. I agree with you.
There-
There will be friction in the system.
friction.
So how have you sort of eased that friction?
So we have partnered with bunch of like all these market intermediaries, right?
Right.
So we have kind of built lot of kind of direct connections with them. We have worked our own kind of lot of, so for example, face matching and KYC validation and those kind of things. We have invested kind of lot more in technology.
Right. So it's you made that or the onboarding process and the KYC process simpler because transactions I think have now sort of more or less become streamlined.
Yeah,
right?
yeah. So onboarding is also now like more or less kind of getting streamlined. I mean, that's just an example. There are a bunch of other things as well.
In terms of fact that customers have now got greater control on the processes, they've got greater control on the outcomes, right? Has that helped, this adoption of the digital adoption?
Yeah. So see, once you have everything visible to you and it's so seamless and everything, then you talk about it to everybody. So today, for example, most of our customers would have come through word of mouth. Even today at the scale, 70 to 80% of our customers, because they are recommended by their friends or family or somebody, because it's simpler, right? To see everything that you hold and so on.
So in terms of whatever holdings that you have, when you bought, when you sold, at what price you bought,
Yeah.
what you can see all of that in one place.
Yes, everything becomes very kind of simple.
So
right?
so he feels that he's got greater control over the entire outcome,
Yeah.
and that sort of delights the customer.
Yes.
Okay. Right. So, I mean, the major advantages that digital platforms as a market intermediary offer subscribers is one, accessibility. And you yourself have said that 60% of your customers come from tier 2 and tier 3 cities, if I'm not mistaken. I mean, do you see this, I mean, again, evolving, going beyond this tier 2 cities and, into rural India?
They will, right? Eventually, like our overall thesis is what? Like India will continue to grow.
Right.
India will continue to be wealthy, right? People will move from traditional assets to financial assets. People will move to digital kind of assets and so on. So it starts with the top and then it kind of keeps going down. But top itself is like still kind of to be covered and so on. And then democratically it will keep going down.
No, because you have potentially 80 crore people who can at some point or another
Yes,
put in money into the
potentially, yeah.
market. We are today at 5 crores, 6 crores, something
Yeah,
like that.
yeah.
So, I mean, these new customer segments, these new geographies, they're going to become very important.
Yes.
So that's why I asked you this question.
Yeah,
So, because today a platform like yours must have covered most of the geographies in this country that matter.
Yeah.
And the second thing is that new asset classes that you were talking about.
Yeah.
These new customers that are coming in, these customers are coming in from these new geographies. Are they, people who only are looking to get into mutual funds to begin with, or they are willing to look at all these new asset classes that you offer?
It depends on the wealth segment, wealth category, right? But mutual fund is I think, very beautiful, like very, very simple and very good product, very well regulated,
Right.
very well diversified. You can diversify. You can start with smaller amounts and so on. So it's more kind of democratic. So you will see mutual fund investors, right, from somebody investing like 1,000 rupees SIP or to like ultra HNIs,
Right.
because they also realize that
Right.
it's a very solid product.
Right. So now
Then
today, 25% of the SIP is coming from your platform, if I'm not
yes,
mistaken.
yes, 1 out of 4 new SIPs happen
Right.
on Groww, and then so
But
yeah,
you are not selling them, no? At the end of the day, as you
it's a
as you
pull
said,
product.
it's a pull
Yeah,
product.
your
Right?
customers decide where they want to do and so on, which is like again trust building kind of thing. So yeah, so there are products which are like democratic, right? From ultra HNI to 1,000 rupees SIP,
Right.
and then now 250 rupees SIP if
Correct.
SEBI like
Right.
comes up with this and so on. Then there are some products which are bit kind of less democratic but meant for like HNIs or ultra HNIs. So PMS, AIF, private equity, and those kind of things. Stocks, I would say, is democratic, but I think there is a barrier of education there. So I think not everybody should do stocks, right? If you don't understand companies, if you are investing, then you need to understand the businesses behind those. If you are a trader, then you need to really understand the technicals and everything. So less democratic than a mutual from that perspective, where the amount of knowledge that you need to have is slightly higher, much higher, I would say. So that's how like you can put like on a canvas, like there are products which are very democratic, there are products which are very like less democratic,
Exclusive, yeah.
exclusive and so on, and then you decide, okay, this is the customer persona, this is the kind of
Right.
products that I should get into.
So the second is affordability, because we anyway said that cost is a driver. I mean, you may not say, you're saying it's not the biggest driver. I take your point on that, but costs are already are very, very low. How much lower can they get? Similarly, ticket sizes have become fairly low. Like we have moved from 1,000 rupee SIP to a 250 rupee SIP. Can it get lower than that? What's your sense on those two, the costs and the ticket sizes?
So scale, see, with scale comes like cost advantage, right? If there is an asset management company which is like billions of dollars of AUM, then you have to pay your fund managers, and then you have some compliance cost and everything, and then every incremental dollar that comes in is like cash flow, right?
Right.
In the expense, and then you can kind of pass on
Leverage on that size too.
yeah, leverage on that size, pass on that to the customer, and then costs keep going down and so on.
Right.
So I think with scale, like today we are at like some scale in the entire mutual fund, it keeps changing, and then we'll go 2x, 5x and so on, and
Right.
cost, by the way, like I think Indian markets are very, very efficient from cost perspective if
Correct.
you compare it
Right,
across the world. Yeah.
across the world, exactly. So, but these costs could, in your opinion, still come further down because of scale. That's what you're trying
Yeah.
to say.
Yes.
Which brings me to a very tricky question out here, because costs have fallen, because ticket sizes have become so small. Is it inducing investors who use these online platforms towards more risky behavior? Like futures and options is a product that you are offering on your platform, right? And primarily because of low cost, low ticket sizes, and the ease of transacting, people have said, let me indulge in a little bit more risky behavior.
Yeah, there are some customers who kind of, I think, so what online platforms need to do, or for example, what we do is build a lot of responsibility features. Now, see, on one side, you are making everything simple,
Right.
low friction, and everything.
Correct.
On other side, you have some responsibility, and that is like that matching thing. So there are certain products which are democratic, certain products which should be exclusive, and so on. So you have to balance it somehow. And the way we balance is, okay, if you reduce the friction and everything, but you need to add some kind of responsibility stuff there. So I'll give you some example. Like, some people get it's a You can start quickly, then you lose money, and then you lose more, and so on. So we built something called safeguard, which is like
Safeguard.
safeguard, which is like if customers keep losing money, we kind of warn them.
Okay.
After 30 days, we kind of soft block their account, which is like,
Okay.
okay, submit more documents
Correct.
or prove that you can, afford to lose more, and so on. There is something called safe exit, which is like you can set your maximum loss that you can have. Another one is very interesting is FNO pause. So you can pause. So you have everything with you. You can do everything what you want,
Right.
but you can just pause your FNO account there.
Okay.
So there's a urge, right? Okay,
Right.
like because as you said, like it's tech has made everything very simple,
Right.
but then you have to kind of resist that urge.
Right.
Anti nudges are like if you're making a trade where the chances of losses are very high, low liquid events, or you give warning to the customer. Do you really want to do this? So at least I can advise my customers, but I can at least tell them,
Right.
this is like the full disclosure and those kind of things.
Okay.
Some people kind of
So there'll be a pop-up that comes up on
that
the
comes a
customer
pop-up
screen.
which tells this is a very
Right, like cigarette smoking is injurious to health.
it's more like in the line in the kind of
Because in spite of that, people smoke, isn't it?
yeah. I mean, see again, this is a very very big what is it called, like question for us always. As I said, right, balancing the two things. On one side, you want to enable access to millions of people.
Correct.
On the other side, you need to ensure that people build wealth, because that's your fundamental job. Right. Grow in 10 years, if I see 25, 30 years, I see if we need to build wealth for the customers. By the way, which we are doing, because most of our customers build wealth using, investment products like long term and so on. Like balancing these is like constant kind of, thought process.
So actually, this is actually a very wonderful concept. You're helping investors, experience failure in a controlled environment. So they've sort of failed. You're telling them, listen, you failed, you've lost money. Now you be very careful about what you do next.
Yeah.
He may or may not choose to accept your advice. That is completely up to him. But unless we continuously do them, the risks that come out of, say, intraday trading or dealing in FNO is something that many of these investors will never understand, I suspect. So I think that's the point you're trying to make.
No, yeah. I mean, see, the thing is that because we started with this fact that we don't want to advise kind of customers,
Right.
but it's our responsibility to nudge them somehow, to
Right.
make them informed about something and so on, right?
Right.
Like on the other side of the things, if you see, it's like making mistakes with a smaller capital is still okay.
Yeah, it's acceptable.
You should not kind of,
but you should learn from it also.
you should learn from it and stay away from
Risky
kind of
behavior.
risking just too much capital or leverage, for example, right? Leverage is worse.
Right.
Or getting into the FOMO of, oh, everybody is buying this, let me buy that, and those kind of things. We are constantly kind of brainstorming on how we can kind of do more and more of this. So I'll give an example. We have something called Groww Digest, which is like a newsletter that goes to customers every day, and every weekly we write stories also. One message that continues going is, this thing, like, avoid risky behavior, how to kind of not lose money. Sometimes how to not lose money becomes more important than how to make money, right?
Let me pick up on this FOMO and its relation to the IPO offering that you have. Because, I mean, most people who get into IPOs is basically because of this FOMO. No, they've seen IPOs open at such high prices and they said, I didn't get into the last IPO.
Yeah.
So how do you nudge them in these cases, if I may ask?
There is this, again, like SME IPO, of course, is optional. So, by the way, story here is that we didn't even launch SME IPO initially. And we thought that, it's like not
Too
very
risky.
democratic product. But then customers started asking for it. So we had to launch. So now there is you have to kind of filter. There are main board IPOs, and then you go and you can choose SME IPOs, and then both the IPOs are available. We're also putting some markers there. And of course, now SEBI is also, I think I saw some news that the minimum
Moving up the threshold.
moving up the threshold and so on. I think those are important things.
No, but even say a main board IPO also, forget about SMEs for a moment.
Yeah.
Even a main board IPO, a large number of retail investors come in because of the fear of being left out.
Yeah.
They saw,
Yeah.
as you said, their neighbor make money in the previous IPO because it opened at 100% premium listing. So how do you nudge those retail investors to say that this can't happen all the time and therefore...
So we do two things. One is on the page, on the IPO page, we write all the risk parameters.
The
So
risk factors.
pros and cons and everything, risk factors and everything. Also, we kind of continue giving all the information to the customers.
Right.
We also, on the parallel, we also put some content, video and all those kind of things, which tells about the company. A lot of time customers don't even know this IPO is coming. What does the company do?
Exactly.
So at least you should know that.
Right.
And then, of course, there is this RHP. You can't read like RHPs are like.
I know.
So we try to kind of summarize those.
700-page documents.
So you summarize those and put in like few points. These are like risk factors, these are like pros, these are cons, and those kind of things.
Okay. That is one space where we are seeing a lot of customers coming in and sort of with the hope that they will make a listing day gain.
Yes, yes.
And many of them do make it. Coming back to the platform itself, you've been repeatedly telling me that your platform is confined to product distribution, and therefore you give all the information, you put it out there, and ask the customer to make choices. But as this wealth management services and the wealth tech platforms sort of evolve, there is going to be the requirement for need-based financial advisory, personalized solutions, delivered at scale, of course, access to new age asset classes, both in public markets, private markets, robo advisory, etc.
Yeah.
So this transition, do you think this will happen parallelly? That means you will also, because I think one clearly is about, getting into a wider market.
Yeah.
But you also need to have this transition happening parallelly.
Yeah.
So you think these two will happen parallelly, or you will have to make a choice between, do I need to be in the wider market, or do I just need to offer these kind of services?
No, it would be parallel because in general, our thought process is always driven by what customers want.
Right.
Now there are like millions of customers and they need some specific things.
Right.
Precisely the kind of things that you talked about. There are certain, very specialized product for certain customers, like, because that's the need. So you have to go both the sides. You offer continuously offering more and more products, but also like EMS, AIF, be it. We got into manufacturing with our own AMC recently. Right, where we launched a bunch of ETFs.
Right.
Those ETFs were not available earlier.
Right.
Those kind of.
So you will move from being product-centric to advice-centric, or many of these platforms will move to be like.
No, we are not product-centric. We will not move to advice, and we'll be customer-centric.
Okay.
So customer needs something, and we'll build that.
So you will be driven by what the customers
want.
Correct. Okay.
And now customers are also like range of customers is very large, and there we'll have to build pockets.
So because you've been talking about this long-term wealth, etc. There is an accumulation phase in any wealth creation process. There is a decumulation phase also, right? Because at some point in time, people are going to retire. And I do remember over lunch you were telling me it's still a very young India, so why are we talking about decumulation? But India is going to get older, right?
Yeah.
So is that an interesting space to be? Because I think worldwide, a lot of wealth platforms like this have started looking at the decumulation phase very seriously.
Yeah, no, we are lucky in India right now to be at the, and also our customer base, like, once they kind of get into that phase, we'll have to start offering. As I said, like, most of our journey is dependent on how customers are evolving on Groww. And
right. So as the
customers
older, Groww will start offering
them the retirement products and all those kind of products.
But because in the decumulation phase, it is also about how to manage your cash flow and stuff like that, isn't it? Okay. So let me then, take a completely different turn and talk about financial literacy. I mean, we did talk about financial fluency a little earlier, but I think we're too early in the day to talk about financial fluency in the true sense of the term. So there is a need to ensure that the most vulnerable and disadvantaged learners participate. And today, you're in those 60% of them are tier 2, tier 3 cities, new years. They are, from a learning point of view, the most disadvantaged people, right? They've never been exposed.
Not anymore, though.
Okay, that would be interesting. So why do you say that?
No, now what was the problem earlier? Like, I grew up in a very small city,
right?
And I don't think anybody even knew about mutual funds.
Okay.
But today that's not the case. Today internet has kind of broken all the barriers,
right?
And not just Groww, like in a lot of digital platforms and like a lot of education by SEBI as a mutual fund saying, and that gap is kind of narrowing. Not like so much gap that we didn't even know about mutual funds, right? And then with online everything, then you don't have the dependency of like branch or something.
So from your experience, this digital delivery of financial education, How best can that be done?
I'm not the most.
No, because you have a large number of
Yeah.
video channels. You
Yeah.
do video channels across multiple languages,
Languages. Yeah.
etc. So,
Yeah.
how do you think that this delivery can be best done? Because why would anybody say that I need to go to Grow to learn about financial markets?
Yeah. So one thing what we have learned is that reaching to customer on their channel. So for example, some people like reading,
Right.
some people like listening, some people like watching, and
Right.
so on. So
Right.
how do you? I mean, it's normal like other education systems, right?
Right.
Like I mean, building that, and probably their AI can help to some extent, right? How to tell customer in the language that they understand, not like language, but in the way, in the medium that they understand, right?
So, what percentage of your customers consume content, through reading? What
Almost everybody, because our customer is a very aware customer.
Okay.
Because it is DIY platform, there's no advice, so they need to kind of be aware about things. So Grow Digest.
Or do they prefer a video or do they prefer a podcast?
So there are both. For example, our
Or
Grow
text.
Digest is read by around 15 million people
Right.
every month.
Right.
Our videos are again watched by a similar kind of number. So we have this Ab India Karega in
Right.
West, where there like we get thousands of customers.
Right.
Different customers, different choice of learning, and so on.
Okay.
And how we nail that at a very large scale is something all of well, we will have to learn.
Because we oftentimes hear that this new generation is a little allergic to text, and they are a lot more comfortable with visual and
I don't know because I feel that they are allergic to not engaged content.
Okay.
Right? Text still like people.
Correct.
I don't know. Maybe there's a lot of truth to that. People like more videos
Okay.
and so on. But there are certain category of customers who like I read text a lot. Like and a lot of our customers also read text a lot.
Okay. So yeah, so coming back to content, which you were talking about, content itself now is a very tricky place because it has to be suitable to a variety of target
Yes.
audiences. Yeah, I mean, everybody in your audience is not of the same level, isn't it?
Yes. Yes.
And this is a very, very diverse country. People speak in multiple languages. So how do you tackle that part of building out financial content for
Yeah.
these diverse economic and linguistic kind of groups of people?
It's very challenging. So the way we have built our content engine is like there is a core research team
Right.
who comes up with like various kind of stories or concepts,
Right.
and then we talk about it in various. So let's say the last Grow Digest was on Polaroid. It was about disruption,
Okay.
how the camera company like
Correct.
came up with this idea and then how it got kind of disrupted and so on. You want to tell your customers about how disruptions happen in industry.
Correct.
Now one way to tell about this story. So we pick a company and we write a story about it.
Right.
And then there is another way to tell it is through very kind of number driven person. You will write about how kind of a company got impacted with that and so on. Then there will be some video about it.
Right.
And so on, some Indian example or some US example. And then third layer is language,
Right.
right?
So how do you make your content more interactive? Like, is it that you also use things like gamification, etc.?
No, we don't use
You haven't started
gamification.
using that, but
See, markets themselves are so gamified that you don't need to do
you don't
anything
need
else.
to do that exactly. Yeah, but it's more in terms of telling the story because storytelling is the best way to
Yes.
communicate complex ideas in
Yeah,
a very simple way, especially in the financial markets.
Yeah. If I tell you, oh, don't do this, it's very risky. It's not kind of engaging. But then you tell through an example, oh, there was this trader
Yeah.
who, made a lot of money and then he lost everything.
Right.
And then he that's like more engaging and then they can relate more, right?
Right. So you were talking about AI, if I may sort of quickly ask you this AI and machine learning, and the role that will play in this entire, financial, not only financial literacy, financial fluency, the entire
Yeah.
platform, etc. But from a customer service perspective, portfolio management service perspective, but more especially from how he manages his own risk or her risk, and fraud detection, etc. How do you see
Yeah.
AI playing a role? And unfortunately, today is a age where there are so many cyber frauds and stuff like that happening.
Yeah. So we are, I think, still very early in the journey, but the way things are changing, they are changing at a very fast pace. So all the things that you said, like customer support, portfolio management, fraud, risk management, I think AI is going to play massive role in everything, except that like it's a bit early right now. So over next few years, we will kind of see a very large impact.
So, right at the beginning, you had mentioned about the fact that you need to engender trust, and that's what's
Yeah,
basically going to
yeah,
help, this entire digital delivery
yeah,
through your
yeah,
platforms of these financial services.
yeah,
Right now, what can sort of break trust is the fact that there are so many now risks in the system,
yeah,
like for
yeah,
example data security, data privacy, and recently we've heard about cases where large amount of insurance data has been sort
yeah,
of hacked into, etc.
yeah.
Does that keep you awake at night?
When you are running an investing platform, like, you're dealing with people's hard-earned money,
Right.
security becomes the most important thing. Reliability becomes the most, like, these are so features. Of course, you can kind of, if you don't have X feature today, you will have maybe 5 months down the line or 2 months down the line. But bigger priority is always like security and reliability.
Right. So how do you build that up into platforms like yours? Because we read so much in the newspaper about people losing a couple of $1 million rupees and things like that.
Yeah.
And many of that is because of whatever it is, the digital arrest, or a lot of it is cybercrime related.
Yeah, so most of the ones that we are seeing is based on this. Okay, somebody calling you and telling, "Oh, I am from this and this," and
Yeah, correct.
customers. So it's not mostly tech right now.
Okay.
Tech also, there have been hacking incidents around the world, right?
Right. No, so coming back to trust, and as much as
Yeah.
when I put in money, I don't say actually I put in money into XYZ mutual fund. Oh, people come and say I put in money into Groww.
Oh, yeah, yeah,
Correct.
exactly.
So
Yeah.
that's where the responsibility grows up.
Yeah, yeah. So that's like our number one kind of always.
Right.
That's why like the highest priority always in the company P0 is always security and reliability, and then rest of the features. So an engineer will not touch a new product unless they take care of these two things.
Right.
The best folks working in this, the very large team working in these areas, and so on.
So,
Culturally, it's very important for us.
okay, and that's the way you build trust in the long term.
Yes, yes.
So, thank you so much for sparing time to be with us today, Lalit.
Thank
And
you.
this was a very, very fascinating conversation.
Thank you so much.